To recap here, it's 3.2% as opposed to a survey of 2.3%, and the core PCE was at 1.3% rather than 1.4%.
And personal consumption was at 1.2 compared to 2.5% the prior quarter. So that is a slowdown in personal consumption.
But better than expected.
Right.
The projection was 1.0.
Right. And some of that is an impact of the slowdown impacting consumption in January and into February. Right. So we could see a bounce back
because of the government
from that.
shutdown, because of concerns about the market pullback, a lot of different factors.
Exactly.
So,
exactly.
Gina, is this further fuel for the fire when it comes to equities?
I think it's somewhat mixed. The key factor in here for me is the inventory line, because what we're seeing in the broader spectrum of S&P 500 earnings are the segments that are most sensitive to these bloated inventory situations where they've seen a slowdown in order growth. Now they're stuck with too much on their books. They're waiting for orders to start to pick up. Those are some of the weakest players in the S&P 500. Those are some of the industrials, some of even the energy companies, some of tech. I mean, we're seeing this certainly in semiconductor space, right? You had Texas Instruments and Intel suggest, hey, we're stuck with a lot here on our books, and demand is not necessarily improving going forward. So this is one of the big keys to managing a turnaround in the earnings stream, is a depletion of this excess inventory so company business dynamics can start to accelerate once again.
I do wonder what it means, and not that I'm not happy about this report, but I do wonder about the second quarter. Then do we see the numbers rein in significantly?
Well, final sales to domestic producers was 2.5%.
Okay.
Right? So that is, again, above trend growth if you look at potential GDP of about 2. So we could see a slight downward trajectory in the second quarter, but that 2.5% number is a solid number.